All right. Hello, everyone, and good morning, good afternoon, and good evening to people who have joined us across the various time zones. Welcome to part three of our Global Acers webinar series. We have come together today to address an important and unavoidable point. As the boom of startups continue across various economies, the failure rate continues to be around 70 to 85%. As a product, you may have created the best one, but who cares if no one knows about its existence? How does your business deliver that unique value to your target customers? Who are your target customers? If you don't have these answers, you're kind of setting up your product for its own failure. And that is where a strong go to market strategy is vital for the success and failure of your product. And to that end, ladies and gentlemen, I want to welcome two of our guests today who have a strong experience in this aspect. I welcome Mahmood Alabbas, CEO of WorkHint, who has been building a global SaaS product to manage on demand talents, and Parth Pareek, who is a co founder of Loopin HQ, which is creating a calendar based productivity platform to organize our crazy remote working days. Having said that, hey guys.
Hello.
Welcome both Mahmood and Parth. Thanks for
Thank
joining
you.
our streaming webinar. And I believe, Mahmood, you can go ahead with your presentation.
Sure. First, thank you so much, guys, for having me. I'll be walking through a very brief presentation about designing a product and taking it through like go-to-market strategy briefly, and then I'll be more than happy to answer more questions and discuss it with you in details. So there's different phases when it comes to building up a product. Of course, like when you build a product, you go for the first step is the ideation phase. And the second step, then it goes through the product development. And the third step, of course, going to market. And in the first phase I'm going to just cover briefly each stage of the product development from ideation to launching to adoption. So in the ideation phase, actually, you will care about the problem that you're trying to solve more than anything else. The problem clarity is actually the base that you will need to generate a variety of product ideas that help you solve the problem for certain clients or certain demographics. And a deep understanding of the problem actually is the key driver to good ideas. You will need to take your time studying the problem and assessing different level of pain points for the clients, and generate variety of concepts on what's kind of the right idea or product that you're trying to build that's going to hopefully solve this problem. The first thing is I've seen a lot of startups that doesn't go through deep understanding of the client's problem. That's why if you are an expert in a certain industry and you acknowledge the problem yourself, it's been faced by your colleagues or others, this is the right actually way to analyze the problem and trying to brainstorm an idea of a product that's hopefully going to cover this. And this is actually the same kind of approach for product managers as well when they're trying to tackle a product within a product, even inside big corporations. So what kind of questions you need to ask yourself in order to analyze the problem properly? First, you have to identify the pain points, the detailed pain points, and it should be identified by the stakeholders that you're trying to serve, and how often this pain point actually occurs. If it's a one-time every 10 years type of problem, then probably it's not a good idea to solve. And if it's, for example, like a real problem, but actually majority of companies not aware of its existence, also it's not a good problem to solve. And the third thing, if it's a pain point that's not continuously recurring, and it has a really big desperation of the demographic you're trying to target to solve, it's not a good problem. So the problem you're trying to tackle when you're building up a product, it has to be a recurring problem in a certain kind of for a certain pain point in the organization or the clients, and it has to be big enough that the clients will notice and acknowledge the issue. And the second thing that you want to ask to build a viable product within this problem is, will they pay for it? There's a lot of problems that we have every day that's small enough that clients say, okay, it's a problem, but I'm not willing to pay a dime for solving it. It's not big of a deal. I can live with it, right? And that's another assessment when you're trying to assess the problem you're trying to solve to build up a product for. So the second part, once you identify the problem in full detail, now you're going to have the ideation of building up a product. When you are building a product, I would love to call it's a McKinsey approach of, they call it the engineering approach to solve a problem, this is the most common approach to build up a product and launch to market. It's literally you are launching an MVP, minimum viable product, into a market, and then you iterate based on the feedback you get. So in this time, you would need to launch different versions of the product, testing, iterating, and minimize frictions until you solve the problem fully. And the product development, this is very crucial part. This is very broad, and I can bring different examples that's actually, and you can see yourself from products when they first launched and how they got evolved to become totally different products depending on the pain point they solve. For example, let's say YouTube, actually, when they get started, it didn't mean it was a really weird idea of sharing a video for dating, something like this. And then they saw, people enjoying actually downloading and uploading their personal videos, and then they pivoted directly to a different approach. So usually sometime when you're building a product, the common sense is not very clear, and you need to make an engineering approach where you launch any pivot. There are some good tools that you can use to build up an MVP with very, very minimum budgets. For example, Wix. Some ideas, you just need a landing page. For example, when Grubhub started, all they had is a landing page to receive orders, which is like a form that they can just send and they receive order and deliver it in the background. If it's a more kind of sophisticated product that you want to build up, maybe you can use Bubble. Bubble allows you to build kind of CRM, different type of applications immediately with no coding required. Or if it's a really big detailed product, of course, the first step you need to do is to design the UX. And there's a really good, of course, Figma is an amazing tool that's mostly used to build up your first early sketches of the product. Finally, the go-to-market, which is, of course, once you build up a very MVP, a small MVP, and you identify the problem very well, you launch. And the good things, if you launch and no one notices, you can launch again and again and again, since you are a startup, right? And when launching the product, actually, your goal is to minimize the friction to help your users solve the problem intended. And there's a certain elements that help you actually minimize the friction. The first elements are you can take advantage of existing solutions, how they solve certain features, and you can adapt to it. For example, if there's a sign up page, you don't need to reinvent the wheel and use different contents, just gonna use what's already works. But in most cases, actually, because your users are different demographics, the onboarding, interaction depends on the feature you're building. You can actually experiment with the product. And when you're launching the product, actually, you're going to launch it to the ideal customer profile. If you have like properly identified your ideal customer profile, it's going to help you easily approach them via different channels. You don't need like marketing budgets if you identify your ideal customer profile properly. Because in the beginning of launching of your product, all you need maybe like 10 clients, or if it's B2B, if it's like a user-based consumer, a, a group of 500 to 1,000 user testing the beta that you launched actually can be beneficial. So the ideal customer profile actually, it goes, based on my experience, it goes the same approach as the product launching, because you launch for a certain type of customers and then you realize they are not the right ones. Then you pivot. So you build up like experimentation cycles for different type of ideal customer profiles until like you hit the right, actually, customers that truly feel the pain strongly. And one thing we learned actually that many founders fall into is habits are not created, they are built upon. So what do I mean by that? I mean, for example, if you're launching a product, let's say an AI-based kind of, product, all right? And your ideal customer profile, let's say retailers that help this bot help them with customer service. If you're gonna target retailers that doesn't have even basic digitization, like their documents are in archives and their documents in certain kind of format, they are not aware of digitization, selling them an AI solution, it's just not gonna work, right? You can't tell them like to go from nothing to AI, right? So you don't build up like a habit out of nowhere. Companies build a habit from formation. And that's being said, maybe you can target either customer profile in the beginning. You're just gonna identify geographic, location. This is very basic. The other detailed layers of customer identifying your customers would be characteristic of, it's a company that's using Slack. You notice like companies who are using Slack, they are more, acceptance to your solution. Companies that your product integrates very well with SAP, let's say. Companies who use SAP would be the ideal customer profile. You classify them based on characters, what applications they use, and etc. So yeah, and so the bottom line that I want to summarize this like very briefly, identifying the problem very well with full clarity, build up an MVP with basic free tools, and launch different versions of the product using these tools, and then redefine continuously your ICP. And finally, just always remember, habits are not created, they are built upon. This is a very important part actually, because people like things they're gonna invent something out of nowhere and they're gonna throw it to companies and they love it. It's usually goes into a formation phase. Habits doesn't like,
Right.
getting created quickly.
Right.
So yeah, thank you.
All right. Yeah. Thanks for that. Definitely, some of these points I can definitely relate to, and I would definitely and definitely know even Parth can relate to it. So I will come back to what my questions are as well. Like I know, like even the audience might be posting some questions, but I personally need some insights as well. But I just want Parth's opinion as well. So Parth, if you can take the stage and what has been your go-to-market strategy for
Sure.
Loopin. Yep.
Yeah, so for us, actually, we started WorkHint. It used to be like a marketplace connecting companies with independent management consultants. So our target was like consultants who are alumni from big firms, Deloitte, McKinsey. And in the beginning, we were going one by one, convincing clients and these talents to join our platform, and then we go to clients and convince them to do that. But of course, this doesn't work. You need like deep on technology and deep on strategy that help you adapt. So what we've done, this is like a marketplace issue. Like you have to deal with the kind of egg and chicken kind of problem.
Right.
Who comes first, the supply side or the demand side? And in our case, it was easier to attract the supply. But even the supply in the beginning was really hard because we were building up a really bad approach. So we were going to each consultants. We had to explain the the product in full and blah blah. So the acquisition time was really long. But we've decided to reframe the approach and build up like an internal different channels to approach them. And then we were successfully gathered 1,000 plus within a month of consultants. And we've done it by actually, since the users remember the habit formation, everyone familiar with applying for a job, right? So we don't tell them about the product. We don't tell them this is a project. We just contract project, apply for a job from this link. So we cut like maybe 4 layers of the product frictions, and we made it one page to apply for a job, which the user already familiar with from different job boards. And suddenly, like we have thousands of signups, and we can utilize different job board channels that's for free, right? We paid nothing. And another strategy right now, like once you build up the supply side, you need to build up an internal tools that help you notify the other side. Oh, there's a new McKinsey consultants like just joined. You can post projects. So we've done like external channels for the projects and external channels of the talents, and really help them meet in the middle in our platform. So whenever like a project posted using the channels we used, we repost. Actually, we hunt projects from different sites and we send them a link, and within one click it can be posted. And then like a notification to the consultants, so they become very active. So you can see with these layers, you're keeping your consultants active all the time and keeping your project posting active on daily basis. So we ended up with $500,000 worth of projects posted every day, every month. So this kept the traffic coming regularly. And so we spend $0 on marketing, and this is just like one strategy that can be utilized once you understand the elements of your product.
Okay.
Yeah.
All right. So thanks for that insight. Let's see what Parth has to offer.
Yeah.
All right, awesome. So firstly, Mahmood, like great stuff. Like fantastic presentation as well. Really loved to hear everything that you guys have been experimenting with, and like loved your perspective on on go-to-market strategy. So what I'm gonna do is I'm gonna skip through some of the material that I already have, stuff that Mahmood has already covered in depth, and I'm gonna skip through some of the other parts of the presentation. Before I get started, just a quick introduction. So firstly, thank you so much, Raj, for having me and Mahmood as well on here. It's lovely, for everyone who showed up, and thank you so much for coming in, on a Saturday morning or a Friday evening. So you guys already know my name is Parth. I've been a growth professional, for the past several years. Currently, I'm working on building my own company, which is Loopin. It's a calendar-based productivity tool. Previously, I've had growth role at Samsung, head of growth at another company which was acquired by Freshworks. I've been a consultant myself. I went to school at Vitsvilani in India, and I've also studied at Columbia University. In my free time, I co-run an Instagram channel for cooking with my wife. I love hiking. I love outdoor stuff. I go out running very often. And since the onset of COVID, I've learned a lot, and I've been trying to practice mindfulness. So that's just a little bit about myself. Moving on to like why you all are here. What is GTM? So this is my understanding of GTM. I believe GTM is a catch-all phrase for everything that happens after product development is complete. So all the marketing, all the sales, all the pricing, business development, and building an engine around all of this to get more users, acquire more customers, and increase usage of your product. Building that engine is what I believe GTM is. Before I go any further, Mahmood covered this as well. He talked about GTM, comes after the ideation and the product development stage. So, just want to reinforce on that. It is super duper awful when you have to sell a product that does not work. It's going to be a leaky bucket problem. You will acquire more customers and you will lose customers even faster. So first things first, the product has to work. The product has to be great. And the only way to do that is ideation, iteration, right? Those cycles just need to, keep on repeating until you get there. I look at building a startup as this multi-dimensional puzzle of sorts, where you really have all these different blocks, and you really have to do that weird twist of sorts, to get the entire puzzle to fit itself. GTM strategy is not very different. The way I look at it, it's just Legos. You have all these different elements, and you need to pick up just the right elements to build something that just comes together. Now, the way you go about that, that's pretty much what I'm going to be covering, through the rest of the presentation. And obviously, I'm going to skip through some of the parts that Mahmood has already covered. But I look at this in 3 different pillars essentially. Number 1, who is your customer? Who are you selling to? Number 2, how will you reach out to them? So once you've identified who your customer is, the next question is, what are the different acquisition strategies that you have? What are the different channels, where you can acquire these customers? And then the last piece is scaling. So this is essentially just optimizing the entire problem. You've identified customers, you've started reaching out to them, but the economics need to make sense. And how do you get there? Within this, there are several different pieces, but I'm only going to be covering those pieces partially. All right, so everything starts with a buyer, right? So you need to identify who is it that you are selling to. Who is that ideal customer for which this current problem, for which you've built a solution, that's a major problem. It has to be a burning problem. Otherwise, it's very unlikely that this customer is ever going to be paying for your product. So you have to approach this, with a little bit of craft, a little bit of, a little bit of intelligence there, right? Like in terms of identifying who these, people are going to be. So at a very high level, it's fairly easy to identify who is it ultimately you're going to be selling to. So I have a few examples here. Figma. It's fairly obvious that you could perhaps just start off with designers. Designers are always building designs. They also need to collaborate. So just as a first step, right? It makes sense to reach out to just designers for selling Figma. I have a couple other examples in here as well. But the question is, can you peel this layer further? Can you dig in just a little bit to identify who specific designers are going to be, just the perfect buyers of your product? So you go one layer further to identify and really, outline, like in just much more further detail, what this customer essentially looks like. So quickly just going over this. What stage are they at in the organization? Are they just an intern? Are they the head of design, or somewhere in between? Who is it, who's going to be that economic decision maker in terms of that purchase? If it's an organization, who's going to be an organization of the right size? Is it just going to be enterprise clients, or is it going to be startups? Where do these organizations stand? Are there further information that you can derive about this customer? What kind of activities are they doing on a day-to-day basis? What are some other pain points these customers are facing? So you keep on peeling that layers of the onion to identify those pain points, which essentially also becomes part of your product backlog to keep on building your product. I'm going to skip through some of this stuff, since Mahmood already covered, ideal customer profile. So in the interest of time, I'm going to be skipping through some of this stuff and, straight and jump to acquisition. So you've identified who your ideal customer is. Now, the next question is, how do you reach out to them? Now, I have a few different strategies that I've laid out here, and this isn't it. So this is, this isn't an exhaustive list of what all you could be doing for acquiring your customers. But depending on the stage where you are at in your journey, the easiest place to start is going to be your first and second degree network. Are there folks in your network, your friends, your family, people you've worked with in the past, any other acquaintances, friends of friends, who you could get connected with? They are the easiest ones to sell to. You're going to be getting like a ton of information out of those conversations as well, which is just going to help you further down the line. A few other strategies here as you keep on building your organization. The way I look at it is you essentially have to build an engine. So acquisition isn't a one-time thing. So at the very beginning of your journey, you're going to be doing things that don't scale. You're going to be doing things one-off, and a lot of this work is just to lay the groundwork. A lot of this stuff is just to understand how to build, how to do this, in a programmatic fashion, how to do this in a way that's going to scale. So as you just go further in your journey, you start focusing on some repeatable activities. So you try and figure out, are there partnerships that can be explored? Is there SEO opportunities that you can come up with, optimizing for content in your website, writing a ton of blogs, writing a ton of articles, partnering with other people to write guest blogs. Can you do paid advertisements? So once as you better your understanding in the process of making that sale, you're going to be getting better at this stuff. So essentially, as you go along your journey, the focus should really be on scalable activities. But you don't start with scalable activities because you just don't know what's going to work and what's not going to work. So outside of all of this, there's one more thing I would like to add, which is growth bursts. For the lack of a better word, that's how I like to define it. These are essentially one-time activities, one-time growth hacks that you can identify to just overcome that inertia. Any product that you are building, it requires just that initial push, just a little bit, to get the momentum going. And there's no science behind it. So a lot of this is just going to be hacks that you all can get creative with, and craft these intelligent experiences, intelligent activities, which is going to just get you going initially. And some of these hacks, as I would like to call them, right, would just be building products on the side which only aid your main product, which becomes an introduction to your main product. So that's one way to look at this, but there could just be other growth hacks as well that you can devise, which is just going to give you that little bit of push to get the momentum going, just to get that ball rolling. So at this stage, you've identified the customers, you've identified different acquisition strategies. The next part is scaling up. Now, scaling up in the context of go-to-market is essentially just optimizing for your costs. Like, how effectively can you acquire the ideal customer profile in the least spend possible? So the two ways to look at this, you essentially need to look at the incremental cost of identifying each customer and the money that they're going to be giving you back. So that's the most simplistic way I can put this in. A fancy way to put this is lifetime value and customer acquisition costs. You are essentially trying to balance out between both of these different um, different metrics. So within scale, I'm essentially going to be talking about a couple of different things. Number one is pricing. Pricing is a fairly important topic when it comes to the way you think about your go-to-market. You've already built a fantastic product. You've identified customers. You've identified some acquisition strategies. But how do you price your product? So to price your product, I'd like to break it down into three different pillars. Number one is you could just have like a freemium model of sorts, wherein you give your product for free for the most part, but there are certain features that the user can upgrade to. A model that comes to mind, when you look at this is, Zoom as an example, wherein when you have more than one person in the conversation, so it's three or more of you, you get the 40 minutes free, and then you need to pay, you need to upgrade to just go on. A different model is a free trial, and there are several different products that you utilize this strategy as well. But in a free trial model, you essentially are required to deliver value upfront and as quickly as possible, because there's a certain amount of days where the user can be using your product for free. And if the user doesn't derive enough value out of the product within those days, or isn't able to identify those aha moments in your product in that stipulated time period, that's going to become a challenge. And then enterprise solutions adapt this other strategy, which is just giving a demo, just an enterprise sales strategy. Now, in terms of pricing, three different elements that you need to be thinking about. The first one is the quantum at which you're going to be pricing. So Zoom, for example, prices based off of time. So 40 minutes, that's their quantum, or minutes rather is their quantum. Dropbox, on the other hand, they give free storage. So the amount of storage that you have, that becomes the quantum. The second element here is, how do you structure the price itself? Is it based on volumes? Is it based on certain time period, which I touched upon just a little bit in the previous slide, which is around freemium free trial. And then the last element remaining is the price itself.
Right.
And then finally, just sort of stealing something from Mahmood's playbook as well. There's no one way to just get the pricing right. It just requires a lot of hard work, a lot of work that goes into understanding, how to price your product. So it's not really about getting the price right. You need to keep on experimenting. That's one. And then the second piece is, you need to really step into the customer's shoes to understand the value that they are deriving out of your product. Is there an economic or a financial value associated with that benefit that the user is getting? So, for example, if you build a product that saves somebody time, how much is that time worth? Right? Let's say, if you build a product that saves somebody 1 hour every single day, in 30 days, that's 30 hours. So in a month, if somebody charges, let's say, making this up, somebody's hourly value is, let's say, $50 an hour. So 30 hours essentially translates into $1,800. So can you price it as a percentage of that? So there's several different ways to look at this, but at the end of the day, you need to price it in a way that the consumer understands it and derives enough value to pay for that benefit that they are deriving out of your product. And then lastly, just to wrap it up, you bring all of these different elements together, and there you have it. That's your GTM strategy. To summarize everything that I've talked about, spend a lot of time in building something that people love. That should be your core, problem to solve for at the very beginning of your journey. Once you've done that, or in some ways, parallel to that, you keep on chatting with customers, right? And the segment that faces that problem the most, for whom the solution that you're building is a burning problem, that's your ideal customer profile. That's your buyer. And then you build an acquisition strategy around acquiring more such people, and getting more such people at scale. Uh, uh, the fourth piece is building a payment solution around it. Like how do you price your product, and then ultimately to wrap it up, you just need to make this entire flywheel very, very efficient. So you need to do everything that I just talked about at scale. So doing it efficiently should be your last motivation. And before I wrap it up, I do want to thank Caroline Clark as well, who these slides originally belong to, and this is a variation of the slides. So yeah, I tip to Caroline.
All right. Thank you, guys. Thanks for these insights, definitely. And I do have some of my own questions, and I see like even the audience has definitely posted a lot of questions. So before we jump into the Q&A, I wanted to ask something which, from my own point of view, right? So I want to flip the equation a little bit, right? So from an investor standpoint, what do they look at a GTM strategy? Like I get like all of these points are coming from you guys as founders and co-founders. Like when you are building the product from the ground up, you have your own mindset, like, okay, this should be my GTM strategy, right? But what do you feel an investor looks at from this strategy?
I can go first. So with WorkHint, we're funded by 500 startups, which is Silicon Valley-based venture, and we also and talk with with angel investors as well. And I've noticed there's a different kind of point of view. For example, the mature venture fund understand your go-to-market strategy. It's in a continuous iteration, and also, but the angel investors is less experienced, mostly, who believes in you personally. But the one thing that they both agree, they don't want their money to be burned on Google Ads, right? All investors agrees on this, and I think it's a really, really bad idea in early stages, because your product is not efficient enough to be experimented with Google Ads. Google Ads, I personally recommend to be used after you had a product market fit. If you see this is the ideal customer profile, this is it's Google Ads and other advertising channels needs to be utilized once you want to build up that sales wheel. But I think in the beginning, this is a really bad idea, and of course they don't want to hear about it. The second thing I've noticed, which is of course obviously your metric needs to be clear and good enough for them to invest, which is, for example, the customer acquisition cost, right? If it's very expensive to acquire your customer at your current stage, it's fine as long as you're showing that this number is continuously going down, or there's a path for this to go down. The go-to-market strategy, as Parth mentioned, actually, it's pieces of different elements. And if the unit economics actually doesn't add up, also it's not a good idea to proceed. And I think VCs, that's what they're looking for. They're looking for a viable product that people want and they can pay for on a really good unit economics that covers the customer's acquisition cost that you've already spent. So yeah.
Okay.
Just to add to that, a little bit, and just a disclaimer here, right? I'm not an investor. I'm a founder, so I can only provide my perspective of what an investor might be looking at. That said, since I'm not in their shoes, I cannot make assumptions. Having said that, what's the ultimate goal for the investor? I mean, let's just apply first principles here, right? As an investor, you want to make money. You are investing in a startup in the hope that you're going to be getting 100x, if not more, one fine day. You don't want to be burning your money, right? So from my perspective, essentially, there's a couple of different things that these, investors would love to take a look at. Number one is the size of the market. So I talked about different pieces in the puzzle. So number one is having an ideal customer, which is going to be your buyer. How many of those do you have? Number two, is that pricing strategy, right? So the way you're going to be pricing and the quantum of the problem as well. How often do you have that problem? So based off of that pricing piece, you are able to identify how big is the market, right? So that just gives you essentially, I want to say like a band or some information on what's the ultimate value this startup, who's pitching to you can capture, perhaps. So that's one part. The second part is, you have so many startups these days. You have so many different companies, who are already very likely solving the same problem that you are solving. And if you are unique in certain ways, even in that scenario, the question is, every startup, every company is fighting for attention. There's only a certain amount of attention that users can give out, and each company is fighting for that attention. Now, when everybody is fighting for attention of users, how do you stand out? And that essentially is the acquisition strategy, and that's where you have to be creative. Now, how this ties to the first piece is that you know how large the market is, but to capture that value, you need to capture somebody's attention. And where do you stand out among 5 other startups, if not more, who are building the same product that you are building, who are trying to solve the same problem that you are solving? So have those founders, identified certain strategies to acquire customers? That's where the acquisition piece, really comes in. Those acquisition channels come in, and tying this back to Mahmood's point, ads isn't creative. I mean, everybody knows about it, right? Like, everybody knows that they can burn money on ads. How do you stand out among those people, right? So you have some competitive edge in terms of maybe the product, but product is easy to do, right? Software is easy these days, right? Any other XYZ competitor who's building what, let's say, who's not building what you are building, tomorrow they can copy the same thing, right? It's not very challenging to do that. So your distribution channels, have to solve for that. You need to acquire customers in a certain unique way and make them stick to your product.
Right. All right. Thanks for that. So and just adding to that last point as well, right? So I think I see the list of questions. How do you define that unique value prop that your product offers? So I know, like Parth, you mentioned, like as founders, you have to figure out like what should be the value prop, right? But once that's identified, but how do you define that in front of customers or in front of users, so that you distinctly stand out from your competitors?
I'd say just by talking to people. The more number of conversations that you have with your customers, that's going to really help you, understand the problems that they are facing day in and day out. It's going to help you understand who they are, what they are like, what is it that they do every single day. It's going to help you really step into their shoes. And then most importantly, it's going to help you speak the same language that they are speaking. So today I can, use very fancy words to explain what my product does, but if nobody gets it, it has no meaning. So other people who are like your customers also need to get it. So you need to essentially be speaking the same language. So to answer your question, how do you identify the value proposition? It's really getting close to your customers and identifying their pain points. Once you identify the problems, you build a solution, and that's your unique value prop.
Okay.
Mm-hmm. So to answer that question, actually, I believe exactly the same, where you need to define the problem and understand the pain points in strong depth. And I would like to mention like one example, which is PayPal versus Stripe. When Stripe actually came in, no one ever thought, oh, there's another kind of online payment solution needed for programmers. But actually, PayPal sucks like crazy, and like the average consumer like didn't know what's the pain point, but developers, they know the bad documentation that PayPal has, and problem the problem with the product. So what they did, they spoke with the developers that doing kind of these integration with their products for payment, and they understand like there's a huge friction in PayPal that they are not covering. So they build up like a very simple documentation. So it's a really I love Stripe. It has a really simple documentation, very integration, very simple APIs, and like products that truly speak to a variety of business model like SaaS, subscription, marketplace, Stripe Connect, and variety of solutions that you can learn in a matter of a day that PayPal didn't have. And they understand this by speaking to developers, right? And understanding the pain point that PayPal is already, big enough to miss out about certain pain points.
So if someone from PayPal has just joined, like, yeah, don't feel offense about Mahmood's comment. Your product
No
is
offense.
no offense. All right. Thanks for that. Another question that I found interesting here is what cross-functional teams should be part of the GTM strategy? So I believe the question is like, should this be coming from entirely from the marketing team, or should it be an amalgamation of the product, marketing, and all other teams as
well?
You can go first.
I think it's got to be like all the teams. So I think in the definition of GTM, I covered that the way I look at GTM is you're trying to build this engine, and this engine has to be efficient, like all in all. So it's not just marketing, going out there and trying to build something, right? So marketing does play a very important role as part of this process. But depending on the kind of organization that you're trying to build, you do need to involve, let's say, even the sales organization, because let's say the pricing piece, it's going to affect them. They also go out, chat with customers. They also need to have conversations with the product team in terms of what to build next. You need to have conversations with the business development team. You need to have conversations with the product team. It has to be an extremely cross-functional effort, which rightly so can be led by the marketing team. But all these different organizations or orgs within your company will have to come in and be a part of the strategy.
Yeah, I totally agree. Definitely, it's a function. The go-to-market strategy. It's a collective effort, team efforts of, the marketing, the sales, the product, even. Of course, for sure, the product is the element, but also mainly depends on your business model. Like I've seen marketplaces, they have supply manager, and they have like SDRs, and I've seen like SaaS enterprise, which we currently do. We have a sales team and a product manager, like a marketing product manager, and in the sales team you have like three elements, which is the sales development, the account management that make the deal close, and the client success that make sure like the implementations and activation is smooth. So the market, the product marketing person, he makes sure like all this the products and the execution is aligned with our mission, our vision, and what the product should do. So it's a collective effort, actually. So, but in terms of specifically, sales, it depends on your business model and what's kind of elements of your operation required. But there's one part actually I need to mention. In the beginning, when you're building up your company, you're not that well, of course, funded to build up like a fancy marketing team and
Right.
product manager, all this stuff. So as an entrepreneur, most likely you're gonna have to wear these hats before handing out to someone else. So I was, I've been acting as the account manager to most, first 10 clients that we have, and I've also have worked as SDRs. So now when I pulled up like the training materials for our SDRs, I already know what I've been through.
Right.
So I can give them that training that help them execute. So I hate to say it, but you have to do it in the beginning yourself and wear
Maybe
different
really
hats.
journey.
Yeah, until you can build up these function, step by step.
All right. Yeah. Yeah, and I definitely agree. Like hands-on experience will definitely trump all other reading material. That's for sure.
Yeah.
Okay. I think we have time for one last question, and I guess like this is a pretty common question that we might get. How do you measure the success and failure of go-to-market strategy, or of any strategy for that matter? Will it be the users that you acquire, or the money, or the more money that you save from your marketing budget? Like, how do you see that?
I think this is a very interesting question. So from my perspective, it's an iterative process to build up your GTM, right? Like, so as I was talking through the presentation, the idea is you have all these different pieces of a puzzle, and all these different pieces need to come together to get something going. So I don't necessarily think there's anything such as the failure of the go-to-market strategy. It's either working or it's not working. And when it starts working, you then start to optimize it, right? So you have all of these different pieces of the puzzle, and you just keep on iterating through those pieces of the puzzle to just make things work. So I don't necessarily think there's this something like the failure of the go-to-market strategy. It's just not going to be efficient enough, right? So you just need to turn this into an efficient flywheel, which is going to help more customers come and discover your product, use your product, start paying for your product, and then get more customers. Getting that entire flywheel right, that's the challenge. So you keep on like solving for that, and you keep on optimizing for it.
Okay.
From my side, I think you need like metric dashboard, and this metric dashboard, it has to be top line metrics. And then you break it down into smaller pieces. For example, this is actually my daily. That's what I do every day to evaluate our performance. Is just track these metrics. For example, the biggest metrics that we have is, of course, subscribers, revenue,
Right.
like monthly recurring revenue and yearly recurring revenue. And the second metrics we have is the churn rate, and we have also the LTV, and also we track the customer acquisition cost. So I have a dashboard of variety of metrics combined. All combined, they are 12 numbers that I track, and I break them down. I break them down on priority. Actually, the biggest priority that shows the success is the monthly recurring revenue. And when we break down these metrics, for example, each metrics has sub-metrics that our team actually has to be responsible for. For example, when we talk about the sales monthly recurring revenue, in order to scale up this number, we have to create sub-metrics for our sales team that has to follow. For example, the success of a sales development reps, SDR, is to set up appointments, demo appointments. That's his job. Like, this is his metrics. His success depends on how many appointments of qualified actual clients he set. And the second metric of account manager is closing. And the success, the client success manager, his metric is renewal. And you can see here, like, all these three metrics, renewal, appointments, leads, and closing, all fall into the monthly recurring revenue, and that we track every day. And if any of these metrics fail to grow every month or fail to grow every quarter, we know we're screwed, right? And we have something wrong with our process,
Right.
and we have to iterate. So also we're building. I'm taking McKinsey Forward program, which is they have a really amazing approach to problem solving. And I'm trying to embed the strategy to every employees in the company, where we have certain problems that we want to address every week, and we have this meeting where everyone can use different approach to solve a problem. And the problems, it's all fall into all in the purpose we're trying to build, and of course it fall into our overall mission of the company, which is we're bringing flexibility to every job function.
Right.
Yeah.
All right. So I see that we're at time. We do have a lot of other questions, but I know it's getting late as well. But thank you guys so much for joining and sharing your insights. It definitely has been a really productive session, and I hope we can continue this again. But yeah, more power to you guys, to you WorkHint, and to you Loopin. Hope to see it grow even more exponentially. Hope your GTM markets and targets, they are achieved every quarter, every month. And thank you once again for joining, guys. And have a good night.
Thanks so much. Yeah, thanks for having us. Thanks.
All right. Thank you, guys. Thanks.
Yeah.
Bye.